What's happening in the stock market today? Let's dive right in. The S&P 500, the market's broad measure of stock performance, briefly touched the 7,000 mark before slightly retreating. This comes in the wake of the Federal Reserve's decision to keep interest rate steady, a move that's causing a few ripples across the market. Treasury yields have ticked higher post-decision, signaling solid economic expansion and stable unemployment rates. Now, let's shift our focus to the tech sector. Chip stocks are making waves, with Seagate Technology and ASML leading the charge on the back of strong earnings reports. However, it's not all sunshine and rainbows. The broader market is feeling a bit of a drag from tech stocks as investors hold their breath ahead of major earnings releases from industry giants like Microsoft, Meta Platforms, Tesla, and Apple. So there you have it. The market is in a state of flux, with the S&P 500 dancing around the 7,000 mark, tech stocks causing a stir, and the Federal Reserve holding steady on interest rates. As the market wavers, investors are keeping a close eye on these developments. And what about the Federal Reserve's decision and its impact? Well, let's unpack that. The Federal Reserve, the United States central bank, recently decided to maintain interest rates. This move came as a response to a solid economic expansion and stable unemployment rates. It's like the Fed is saying, hey, things are looking steady, so let's not rock the boat. Following this decision, Treasury yields, which are essentially the return on investment for government debt, rose. It's a bit like the market's way of saying, okay, we see the stability and we're going to invest more in government bonds. Now here's a twist. Treasury Secretary Scott Bessent denied reports of the U.S. meddling in the currency market. It's like playing a game of poker and keeping your cards close to your chest. But despite this, UBS, a major global financial services company, predicts further rate cuts by the Fed, maintaining a bullish outlook on equities or stocks. So, what does this all mean? It means the Federal Reserve is playing a significant role in the economic landscape, making decisions that have ripple effects across the market. It's clear that the Federal Reserve's decisions have significant implications for the economy. So, what are the key takeaways from today's market movements? Well, there's quite a bit to unpack. First off, we saw the S&P 500 briefly touch the 7,000 mark before retreating slightly. This happened in the wake of the Federal Reserve's decision to maintain interest rates. This decision by the Fed had a ripple effect, causing Treasury yields to rise post-decision. The Fed justified this by noting solid economic expansion and stable unemployment rates. Meanwhile, chip stocks enjoyed a surge on positive earnings, with Seagate Technology and ASML reporting strong results. It wasn't all sunshine and roses, though, as the broader market was dragged down by tech stocks ahead of major earnings releases from tech giants like Microsoft, Meta Platforms, Tesla, and Apple. Lastly, it's worth mentioning that BJ's Wholesale Club saw a downgrade by Jefferies, who cited growth challenges as the main reason. With these developments, investors will continue to monitor the market closely, keeping an eye on these key factors.